Hey everyone, it's Jonathan. I want to make a completely free video just because there's a really unique opportunity presenting in the bond market. And from what I've seen, most people trade bonds wrong. So watch. In front of you, this is the yield curve. Okay? Right now the Fed's moving, right? The Fed's in play. As rates go higher, prices go lower. But rather than speculate on the direction of bonds or notes, the proper way to trade bonds is relative value. And let me explain exactly what that means. Here are the liquid contracts from the Chicago Mercantile Exchange. You got the 2-year, the 5-year, the 10-year, the 30-year, the bonds. Now, a lot of people just trade ZB or TLT, but you can't trade any of these in isolation. Here's why. Whenever we analyze bonds, we need to do it relative to one another, okay? Because what happens is these contracts are all driven by supply and demand, right? So all of a sudden, if China needs to sell a whole bunch of 5-year future contracts, 5-year futures are going to get inexpensive relative to its neighbors. So as rates go higher, if you think bonds are going lower, if this happens, you don't want to sell the 5-year, you want to sell the 10-year. Or maybe the 10-year gets really expensive. When this happens, if you want to sell a futures contract, you want to do the 10-year. If you want to buy a futures contract, you absolutely do not want to do the 10-year. So now let's pull up a chart, and I'm using Sierra charts right here. It's pretty easy just to put in a formula, and that's what I did. I put in a formula, and in front of us, we're looking at the bond fly, okay? The ZB fly. So this is the ZB, which is right here, against the 10-year and against the ultra. So it's a butterfly. The ZB, the 30-year, is going to be the belly of the butterfly, and the two wings are going to be the 10-year and the bond. And this chart is showing me the relative value of their relationship. So if we go back to the beginning of March here, you can see the ZB was very expensive relative to its neighbors. And that's because this butterfly chart is trending higher. As it comes off, they're coming to a better semblance of value. Maybe even here, the ZB is inexpensive relative to its neighbors, but to really do that analysis, you'd have to look at this butterfly chart and also look at a butterfly chart of, say, the 10-year. So this is when it gets really cool, okay? Same chart here, this is the bond butterfly, but now I'm looking at the 10-year butterfly as well. And on this chart, we're gonna have the 10-year as the belly, and the two wings are going to be the 5-year future contract and the bond contract. And so this is telling us the relative value of the 10-year against its two wings. Here's how to use this information. Let's go back to 321, this time period. Right here, you can see the 10-year is very expensive relative to its neighbors. 321 here, you can see the bond contract is very inexpensive relative to its neighbors. So if you're an outright trader, if you're speculating on the direction of rates, where people get trading bonds wrong is they trade ZB, they trade TLT. Well, if you think prices are going down and rates are going higher and it's March 21st, you absolutely do not want to sell ZB. You only want to sell ZN. That's where you're going to get the best return on your capital. That's where you're going to get the best bang for your buck. Same thing if you think rates are going lower on 321, you only want to buy the 30-year. You do not want to buy the 10-year because you're seeing the relative value relationship. And what this is, or I look at it as like a kink in the yield curve, where you see the yield curve is nice and smooth, except there's a little kink. And as traders, what we're looking for is short-term inefficiencies in the market. And this is how you find them, trading bonds. Now, real quickly, I want to show you something, a little spread. Let's just look at the spread between the 30-year and the ultra, okay? So the 30-year and the ultra, one minus the other. And here's what it looks like in front of you. On a 60-minute, it's just ZB against UB. And here's how it looks. Now, if I show you some more data, this is a really, really cool trade, okay? And it's just getting rolling over back to this time period. And again, this is just the ZB against the UB, the difference. So think of like a rubber band. Rubber band pulls, pulls, pulls. It's inevitably coming back, right? The ZB is not going to trend one way for a whole year, and the UB is going to trend the other way for a whole year. It's not going to happen. What I want to show you with this chart, and this is a great trade. You could buy ZB and sell UB down here to take advantage of a mean reversion. But now I want to talk about why we use infinity futures. Infinity futures, at least as far as I know, retail brokers, they honor exchange recognized spreads. What that means is the exchange recognizes these as highly correlated products. The exchange is going to say, if you're long one ZB and short one UB, you could offset them to a degree because there's a high correlation. Most brokerages for the retail trader are going to count one ZB against one short UB as two totally separate contracts. And that's absolutely wrong. I think that's like $10,000 of margin if you're long one ZB and short one UB. If they're two separate, that's $10,000 of margin. That's ridiculous. What Infinity Futures does, and why I'm such a big fan, is because Infinity Futures recognizes and honors the exchange recognized spread relationship. So if you're long one ZB and short one UB, the margining for just a one lot is about 1/5 the price. It's about $2,000 for a one lot. So you could, in a sense, have 5 by 5 with Infinity Futures and have about 10,000 in margin. But if you're using, I don't know, Thinkorswim or something like that, you could have 1 by 1 and you're eating up the same amount of margin. For a trader like me, that's crippling. This is the correct way to trade bonds. And as you get into this, then you'll really start to see the value of having a brokerage that recognizes exchange relationships and does margin correctly, just like Infinity Futures. If you guys have any questions at all, you can email me directly, Jonathan@ActiveDayTrader. Hope you guys liked the video. Thanks.